Good afternoon, everyone, and welcome to today's discussion on European cash management, impact of COVID-19, hosted by CRISIL Coalition Greenwich. My name is Tobias Miarka, and I'm co-head of banking at Greenwich Associates. Before I introduce my esteemed panelists and get started, let me cover a few housekeeping items. If you hear an echo, please check your audio and make sure telephone is selected. Questions are welcome. Please type them in the question or chat box, and we will address your inquiries during the Q&A section at the end of this discussion. After the event, you will be asked to participate in a brief survey to let us know what you liked about the webinar and what you might like to see next time. And finally, this webinar is being recorded, and a link to the recording will be sent to all attendees along with a copy of the slide deck. With that, let me introduce today's panel members. And today we have, starting with HSBC, Cara Savas. Hello, Cara. Cara is a European regional head of sales for global banking clients with the global liquidity and cash management business of HSBC. Cara joined HSBC in 2018, having spent 14 years with JP Chase in a variety of sales leadership roles, including natural resources sales head based in Houston and European sales head for multinationals based in London. Prior to JP, she spent 4 years in transaction banking at Deutsche Bank in London and Brussels, and 4 years at Citibank in global relationship banking in Dublin and London. Cara is a graduate of the National University of Ireland. So thank you, Cara, for joining us today. And next to Cara, we have from BNP, Steven Lenaerts. Steven is the head of product management of BNP Paribas Cash Management Global Corporate Connectivity Solutions, its associated payments, reporting, and treasury services, and the digital enablement of its corporate clients. Before joining cash management over a decade ago, Steven held various positions covering internal audit, commercial banking, the business development, and business development. He holds a master degree in applied computer science from the Vrije Universiteit Brussels and an MBA from Vlerick Business School in Belgium. So let me also take the opportunity to introduce Coalition Greenwich, leading provider of market information, insights, and client intelligence to the financial services industry. More recently, Greenwich is now part of CRISIL, an S&P global company, and integrated with Coalition. We wanted to kick off this discussion by sharing some insights from our ongoing European large corporate cash management study. These insights are based on detailed interviews with large European corporates and MNCs, as well as large subsidiaries of non-European MNCs domiciled in Europe, with a turnover of at least 500 million euros. As I mentioned, this study is still ongoing, and I would like to encourage those corporates who have not had the opportunity to participate yet to do so over the next couple of weeks. First up, we'd like to understand what is the impact of COVID-19 on the business of European large corporates. And we have the advantage of pulling in data from a previous study that we've discussed, done in March to August, so covering broadly the first wave, and compare that to data conducted between September and November, which somewhat covers the second wave. And I think there are a couple of key takeaways. As you can see here, I think the first one is clearly that we are not out of the woods yet. So still about 60% of large corporates interviewed across Western Europe tell us that they experience a negative or even highly negative impact on the back of COVID. At the same time, we also see that there are some improvements, as you can see here, with some improving to neutral and also some in terms of improving to positive. Digging a little bit deeper into the data and looking at it from a industry point of view, we can see that improvements are particularly experienced around the consumer discretionary and staples businesses, as well as energy. Results from the healthcare industry are more mixed, and we see some small improvements in regards to industrials, materials, as well as transportation. Utilities, as you can see here, have a most unchanged view at the moment. Now, when we are trying to describe the situation different corporates are in and how this has developed over the last 9 months, we have identified an evolution from react to respond and also to reinvent. And so when we went out between September and November, we asked actually the corporates, where do you see yourself in those in any of those 3 buckets? And I would say it's still an astonishing 19% tell us that they are still in the react phase, that they are still in the initial shock phase, where they are very much in need for short-term liquidity and also for government support. 56% tell us that they are in the response phase, so they still require a lot of support from their banks, but at least they are trying now to orient themselves as part of the ecosystem and make sure that they are out of this initial shock phase and get stronger. About 25% are finding themselves in the reinvent phase already, where they tell us that they have taken more fundamental look at actions to kind of reinvent themselves and also look at a path of recovery. I think what's also interesting is that all those 3 phases, and we will discuss that later on, are really underpinned by a rapid evolution of the digital impact that clients and banks see in this crisis. Now, moving on to understanding the most valuable responses from cash management providers to respond to the COVID crisis, we see that flexibility for documentation is clearly the #1 point here, and this is very much corresponding also to the majority of corporates still being in the react or response space. So flexibility of documentation, especially if you look at the verbatim, also things around KYC in particular seem to be very much top of mind of clients. What they also see is an adoption of digital processes. Quite an interesting comment also here on the right-hand side that some banks are not yet accepting digital signatures, which obviously when you work from home will be quite a difficult undertaking. And then also support for working capital, real-time payment tracking, and things like webinars to share research and insights are mentioned as one of the top 5 initiatives they have experienced from their providers. When trying to understand if European corporates are starting to experience the benefits of digital solutions, we see a positive trend to ease operations in KYC, while there's more to come to accelerate knowledge-based innovation. So when we asked, have you experienced new values and insights from the digitization of KYC and onboarding, about a third of respondents give us a yes. Also, that trend is increasing. Whereas on the more knowledge creation side, so really using predictive analytics and AI, it is still a relatively small 19% that give us a yes, and also it's not increasing. If anything, it's actually has been declining somewhat. So people are really still very much occupied right now addressing the most immediate needs, as they are, the majority is in this react and response phase. Key benefits experienced by large corporates as a result of accelerated digitalization are around transparency and user friendliness. So coming back to the client experience, streamlining speed of internal processes, and digitized documentation and e-signature solutions. And once again, if you see on the right-hand side, there is again and again the KYC process that comes up as a very important point. Now, in the context of digitization, a lot has been discussed around the power of application programming interfaces. And treasurers are keen to access a variety of banking products and services via API and would like to see more through collaboration with banks and third-party providers. But as we all know, there are at least two that it takes to tango. And I think it is interesting that only about 50% of corporates tell us that their large corporates' treasury management systems are ready to accept APIs. What we think, though, is that with the increasing understanding of API benefits, we expect this figure to increase very quickly. I think with the clear appreciation of advantages in the areas such as liquidity management, financing, credit processes, internal accounting, real-time payment, and risk management. I'm sure Cara and Steven will tell us more about that in a second. And looking at the evolution of selection criteria, and I'm not sure this slide is actually showing fully, but I will tell you what you should be seeing, is that competitive pricing is still number one, which you see here, which would be about 65%. But it is decreasing, which is somewhat confirmed also by previous studies we've done on the trade finance side, underlining that clients are willing to pay a little bit more if they, in this particular crisis, know that there is a clear and easy delivery. What is very clear is that things around customer service and digital banking capabilities is, if anything, solidifying and is making its way up as a very important competitive differentiator. At the bottom, you would see things like fraud prevention, which is kind of the fourth from the bottom, which is more seen as a given rather than a differentiating selection criterion. And also the last one at the bottom is the 6% you see there would be on the commitment to ESG principles. So we can see that ESG and the cash management board is still early days, and we'll discuss that in a second. Now moving on to cross-border cash management, I think what we've seen is that COVID-19 has clearly had an impact on cross-border flows, obviously, but despite flow volumes declining due to slower economic activity, the need for a banking partner to support corporates' cross-border activities remains strong, even slightly increasing. So when we ask clients, do you have a partner or multiple partners to help you on your intra-Western Europe cash management needs, or also outbound into Central and Eastern Europe, Asia, Middle East, and Africa, or the Americas, we even see across all those regions a slight uptick. So I think it's really interesting to see that while the volumes are declining, obviously, given the slowdown of activity, the actual need to have a partner to manage these cross-border needs is definitely stable, if not improving. And what we also found in this context is that regional specialists with solid boots on the ground are increasingly used for corporates' outbound cash management needs. So we've just, it's a little bit of a busy slide, but I think the gist of it is that when comparing data from 2006 to 2020 and all the way through, we have a nice time series here. It is shown that in most regions, including APAC, Western Europe, Middle East and Africa, as well as Central and Eastern Europe at least, the number of clients mentioning the lead provider is increasing. And so I think that is just underlining again that boots on the ground, really understanding what is happening in the particular regions is important. And we've also seen that obviously there was a retrenchment of some banks supporting some of those regions, and therefore there's a little bit of a movement towards the leader and also the top three average leaders. Now, finally, we would want to just very briefly touch upon ESG. I think the study shows that it is still early days for ESG and cash management, and while banks' ability to provide sustainable finance or advice on ESG considerations is increasingly important for overall corporate banking relationships. A cash management provider's commitment to ESG principles is not yet a key criterion for large corporates. So we believe that with governance requirements and regulation changing right now, this will also change very quickly. So although early days and relatively low responses on ESG being important in the context of cash management right now, this is definitely a trend to anticipate increasing quite rapidly. With that, let us really move on to the panel discussion. And we want to stick a little bit to this principle of react, respond, and reinvent, honoring the fact that corporates are in different phases within this evolvement. And I would like to just maybe start the first question, maybe Cara, if we can start with you. How are banks helping to meet the evolving needs of clients across different markets and to mitigate the impact of COVID-19?
Thank you, Tobias. I think I would look at this really in terms of two areas of focus. I mean, initially, you saw there in your own numbers, the initial shock around the liquidity piece, right? So it was very much a react in the first wave as corporates were shoring up liquidity, perhaps drawing down on their credit facilities, etc. So I think the impact on cash flow, liquidity, earnings for corporates has been far-reaching, and some sectors have been particularly affected, such as services and discretionary spend sectors. But in the second wave, I think many more corporates have moved into this respond and maybe some even into reinvent, right? Liquidity remains very important for the corporates, but I now see them trying to recalibrate the liquidity structures and solutions they have and make sure they're fit for this new normal, right? With an eye always towards enabling more agile, on-the-go, real-time reporting and decision-making. I think, given we have still continued uncertainty, treasurers are looking to equip their teams with the right tools, not only to enhance the visibility, but also to help them provide actionable insights, particularly around funding, be it internal or external. And data and analytics will be important for enhancing this cash flow forecasting piece as corporates look to navigate uncertain and unfortunately sometimes declining cash flow for them. On the digital side, I think the scale of digital banking has increased, right? As companies look to find new ways to conduct their business virtually, while also keeping an eye on and trying to manage and reduce their costs. Many firms and banks such as BNP and HSBC are setting up digital services for quick wins for companies and treasurers to help them accelerate their collections, right? So linking the digital to the liquidity. So, more real-time payments and also tools to help them keep cash at hand longer, extending payment terms through things like virtual cards, etc. But if, I'm looking back in 2020, I think the restrictions of movement have meant that we've all experienced, we all now understand that there's been a huge increase in the use of digital channels, right? So digital transformation, not just from the customer-facing proposition, but also in how we all do our daily job, right? So ourselves, our clients, have large parts of the workforce working from home for many, many months. And in this situation, I think corporates have really needed to embrace digital technology to keep their businesses running and enable staff to communicate and perform their duties. So we've seen a massive accelerated shift in the uptake of corporate digital banking solutions during 2020, especially I would say on the mobile channel side. The move to mobile, it was happening anyway, but I think the pandemic has really accelerated that. If I look at it from a HSBC perspective, we've seen over 150% increase in the number of downloads of HSBC Net Mobile, right? And also in the mobile payment, the actual value of transactions transacted through mobile hugely increased versus a year ago, as businesses are forced to do more and more in a mobile way.
Right, thanks. It's quite interesting that we can very quickly go into the digital banking world. If we think about even the broad question of different initiatives here, so it seems to be really about that quite a bit. Steven, so just over to you. I think I've seen you nodding your head quite a bit when Cara was telling us what she's seeing, but I'm sure you have some additional thoughts here in terms of the broader, not only the digital side, which we'll get into a little bit more in the next question, but also the broader ways of helping to meet those evolving needs. And those needs have obviously been changing very quickly. And sometimes it was more about the speed of adopting than the actual need, which was somewhat known, but not maybe to the magnitude that we've seen and the speed. So over to you, Steven.
Thank you, Tobias. So I can only echo what Cara has been saying, but just to add some color maybe to it. I think the wording that you use, which is initial shock, summarizes quite well what the impact is, because all of a sudden a variety of measures were taken, not all the same in different countries, and companies were scrambling to make sure that they could maintain appropriate levels of liquidity. So it was quite shocking. It was a disruption, and I also think that beyond the liquidity part, there was also some concern on the continuity of the day-to-day operations. We had discussions with a number of corporates saying, okay, we're now confined, we have our salaries to pay. Can we discuss a number of extreme measures to make sure that we can make the salary payments work? We had discussions on how to speed up access to or remote access to a number of key treasury or bank platforms. There are other things than the daily operations, the KYC recertification, and KYC came back a couple of times in the slides that you showed. So KYC recertification is a burden. So we, for example, we said, well, let's take care of let's keep the show on the road, and let's take care of that KYC recertification later on. So showing a little bit flexibility towards those corporates that have other things to take care of. At mobile, of course, but also contactless payments in the B2C segment. I think there were some frictions that were lifted in order to help companies staying in business and making those payments as contactless as possible. On the other hand, we have to be very honest. If you are confronted with a sudden crisis, you cannot reinvent the wheel. So I think the focus in the first shock phase was very much on adapting a number of existing practices, giving some leeway, giving some flexibility, but also looking at what are a number of digital capabilities that we already had in store, and to what extent could we accelerate the deployment of those. And just to give you an example, in 2019 we refactored into a completely digital process the user enablement on our web platform, which basically combines a digital creation process, a digital token, and a digital activation process together with capturing KYC information for electronic signatories. Well, we were gradually, progressively pushing this out. To give you the numbers, in January, we had for the enabled cases, we had an adoption rate of 8% in January. In November, we were north of 70%, showing clearly how these digital processes, where a lot of disruption has taken place, can help clients in maintaining access for the proper people to our platforms. E-signatures also came back. I think there's a variety of solutions in the market. It's all about what can I accept and where, and showing some leeway. I also agree with Cara that once the initial shock was under control, the focus is shifting a little bit to how can I increase my resilience to make sure that I can cope better with a disruption of this nature. And we already see that the impact was more mitigated on the second wave. And this is continuing because second wave, third wave, we see corporates, cash management banks progressing together in a collaborative way on more structural solutions than those that we devised on the short term, which was financing, flexibility, pushing out a number of digital solutions, but to make the entire experience more resilient. And we'll see later on that digital is an important factor to obtain that resilience.
Yes, I think to your point, it really has been a much more collaborative process, as clients tell us. And also clients do tell us that, in comparison to the crisis 2008-9, where I think some banks took quite a drastic view, not always to the likings of their corporate clients. This time round, banks by and large have been much credited for their collaborative and also flexible approach, as this was really kind of the whole ecosystem was hit at the same time, and people were more and more aware that, as they are an important part of the ecosystem, they have to kind of contribute their part to it. So I think that was just one positive also from the feedback we got from corporates, which, they're quite honest. These are very large corporates. They are multi-bank. They don't have to kind of tell about clients about what their banks want to hear, but they're very, very much in the driving seat of choosing who to work with, and that was really appreciated very much. So thanks for that. Maybe we can move on to the next question, which will be, what are some developments in digital and product solutions to help clients better manage their cash management needs? And I think both of you have already mentioned a few, but maybe Steven, if you want to start on elaborating a little bit more around this, also from a BNP or also from a broader perspective, what you see in the market.
Okay. Now, I think the overarching answer is a very simple one. We're basically going to do more of the same, but at a larger scale and at an accelerated pace, because digital transformation has already started. But I think the pandemic just showed the value that lies in that digital transformation. And we mentioned already a number of topics. Clearly, electronic signature capabilities, whether they are offered off the shelf by the bank, making them available in a larger number of geographies, taking into account local regulatory requirements as they might exist, on a broader range of exchanges, or likewise for corporates that are already equipped with digital signature solutions, accepting a wider range of those solutions, because there is still a variety of those in the market that are coexisting. Onboarding was also mentioned. So at BNP Paribas, we have built a digital platform to do client onboarding, account opening, KYC review process. We were gradually rolling that out. Clearly, it's a solution that provided us with a lot of value in servicing our clients, and hence value for our clients, taking into account the restrictions that we faced with the pandemic. And clearly, we're just going to accelerate, covering more use cases in that respect. KYC, let's be honest, it's a burden for corporates, but it's a burden for banks as well. Clearly, digital can help us iron out inefficiencies. Multi-bank, you already mentioned, Tobias, so I think we have to look at a number of industry-wide solutions and the role that they can play. For example, the Swift KYC repository. Of course, those need to obtain critical mass in terms of adoption. And it's more, I would say, something that we learned and on which we are moving forward is streamlining our internal passporting principles to make sure that it becomes even more easy to do business with us across different geographies. It is also about a little bit giving visibility, predictability, knowledge on what is required, where and why. Coming back to liquidity, as I said in the first wave, securing liquidity. The second wave and going forward, it's more about further optimizing liquidity, where we think that there is additional value to be found in further centralization to maximize your internal funding. There are also new digital payment means that are emerging, and they have their role to play. And of course, and Cara mentioned that as well, renewed interest in cash forecasting to better understand the liquidity dynamics and to drive the working capital optimization. Another word that was already dropped is real time, and it's an important axis of improvement in the payments and collection initiation process, in the accuracy of the visibility on the liquidity positions. And I think we need to blend a number of things. You have real time, you have digital, you have API, instant, okay? Those are all very interesting topics as such, but they are far more powerful if you combine them. And especially in terms of API, you showed a specific slide on API. I think it's an important, interesting development that will further complement the existing connectivity solutions. There's still a level of standardization that needs to be obtained, and that standardization we need to work on together, to corporates, banks, TMS, and ERP vendors, and alike. And then maybe finally, I think also the time is a little bit past us where we in the bank, we invent a new product and then we try to sell it. I think what the crisis also shows us, and the digital transformation in combination, is it's really worthwhile pursuing co-creation initiatives with our respective client bases in order to reduce the time to market, ensure the fit for purpose, and at the end of the day, optimize the investments.
Right. I think, I think it just came to mind that in some ways it's not dissimilar with the development of a vaccine, right? Where you just have to, you had a lot of the tools in store, but obviously the acceleration has really, and also the process with the regulatory process around, etc. Everybody has pitched in to really make this a much quicker to market, if you will, experience. Maybe Cara, if you want to comment as well. Also, I think one thing we've seen is that this the COVID crisis has been a catalyst to move the awareness of digital needs from the shop floor, if I may say so, to the boardroom. Mm-hmm. And maybe you can give some examples on that. I think it's quite interesting because obviously digital was in everybody's mind, and this is not new to 2020, but I think the importance and also kind of the existential role it can play really now was very prominent in the boardroom as well. So I think we've seen, and I'm sure you've seen as well, that there is much more attention to this, and also then there's more willingness to invest both in people and in technology to accelerate that. So I think that would be one additional aspect interesting to discuss in this context of digital. And then also maybe if you foresee, and obviously nobody has a crystal ball, but there are obviously some long-term effects that we would anticipate. So certain things are really just to manage keeping the head above water in the current environment. But we already see in other areas like real estate, commercial real estate, that people will anticipate there will be long-term effects. People might actually work from home 2 days out of 5 a week, or whatever the combination will be, and whether you see some of that also emerging, obviously supported by digital.
Tobias, I'm really glad you mentioned the vaccine thing, because it was on my mind and I didn't want to, because I didn't want for a minute to say that banking and cash management was in any way as important as the vaccine development. But I think how it was developed and the collaboration around how it was developed and the speed and agility at which it was developed, to me really symbolizes everything that's going on in our industry as well, right? And I wonder and I hope that, that's a lasting cultural change for all of us, right? So we spend years developing products, thinking about them, talking to clients about them, but actually getting them onboarded, getting clients using them, continues to take years. So I think there will be, and there is, this mind shift change to more instant, more real time, more agile. I heard the CEO of Microsoft liken it to 2 years of technological acceleration in the first 3 months of the pandemic, right? So the pace at which everyone is adopting new technology has increased that much. I mean, Steven has gone through a lot of the detail, right, in terms of what the banks are doing around mobile and API, and real time. And I think real time really signifies it all, right? So on the liquidity side, we want much more real time information, right? Treasurers need to know in as real time as possible what their particular situations are. So cash flow forecasting, which is always top of treasurers' agenda, continues to be there, but I would say it's even more critical, right? It's critical when you think about supply chains, when you think about the disruption that's happened, you know, to supply of particular products, to demand for particular products, being able, be it through the use of an API, to reconcile much quicker so you can release a shipment of goods. In the disruption that we're all experiencing in our businesses, enabling that in a much more real-time basis really oils everything to flow much more easily. I think the onboarding piece is really critical, and lots of these new solutions that all the banks talk about in terms of API, virtual account, etc. I think how they are implemented is much faster than some of the more traditional ERP, file-based, you know, really intense connectivity-based solutions, right? So if you think of a world where a virtual account structure is replacing a physical account structure, this can be done, you know, in hours and days as opposed to weeks and months, right? And I think that this now is the time for these types of solutions, as we need to work at a much more rapid pace. The onboarding piece, you know, we all know, you know, it's the nirvana we're all trying to solve for in terms of making it much more digital. I think there has been huge progress in the industry around that. You know, like BNP, you know, we've developed a digital platform that makes it easier to onboard clients, right? Renew KYC information, etc. But it's, you know, it's not 100% there yet for any bank. But what the corporates really need is us as banks to use information we have, right, to help populate e-forms, to accept e-signatories, which I think, again, the pandemic has accelerated, for corporates to know where in the process they are, to be able to access, you know, process flow in terms of their onboarding, etc. You know, this is a huge step forward, but I think, you know, that coupled with the types of solutions we're recommending more and more makes this onboarding and transition much faster and easier now.
Yeah. By the way, I'm just very thankful that both of you are kind of commenting very much on onboarding KYC, because I think, you know, if I remember a few years ago, I had a lot of discussions with cash management professionals said, well, I'm responsible for cash management. I'm not responsible for KYC and onboarding. So, you know, don't talk to me about it. That being said, you know, there's clearly now with your responses, the recognition that this is a very important product that usually initiates and triggers those onboarding and KYC processes quite a bit. So actually, if you want to improve the cash management experience from the client's perspective, that is an integral part of it. It's not just the delivery of cash flows, etc. And I think it's really, I have to say, just having you know, operated in that space as a consultant for, you know, 15 plus years, there's a clear evolution of recognizing that, and that's really, I think, something that all the attendees, the corporate attendees in particular, were welcome, because it is one of the main pain points again and again. And we all acknowledge this is, yes.
Tobias, you have to take some credit, and because we really do listen to the output of your surveys too, right? And I think the pain point of onboarding has come through in surveys year after year, right? And I think we are all, as an industry, trying to solve that, right? So trying to do right by our compliance and our due diligence responsibilities, but at the same time, trying to make a corporate banking experience as easy as possible.
Yeah, exactly. And I think from that perspective also is a good mix of the panel, where you being much more on the sales side and Steven being more on the digital side and operational side too, because those two, you have the front line and then you have to deliver on those promises as well. And it really is a good evolvement there. Maybe in the interest of time, let's maybe move to the next question, because I do think that, especially with the focus of the study being large corporates, so not only multi-bank, but also in most cases very internationally oriented, I would wonder, how do you see the international cash management needs of corporates evolving, and which actions are you taking to anticipate these evolving needs? This could be, on the digital side, but it could also be other things. One thing I've been reminded of when preparing for this presentation is the evolvement of the different actors. So when we looked at the evolvement 2006 to 2020 of who was the number one in certain, or number 2, 3 in the certain markets, there has been in some regions quite a change. Notably RBS, obviously back in 2006, still being very international, and then just actually being obviously driven down by obviously the changes they've decided on. But I think there's a lot of involvement, and I think it is also for the banks like HSBC, but also BNP Paribas, which we've seen really over the last couple of years emerging from a European powerhouse to an international powerhouse, that there is benefit in doing that, and clients are appreciating that, because in addition to the differentiating factor we discussed around ease of doing business and the client experience, the one other really differentiating factor within a rather commoditized product environment, let's be honest, is the international capabilities. You either have it or you don't, right? And to maintain it, we also know, is a very costly undertaking. So one discussion point we always have is that clients really want to have boots on the ground all the time, but it is sometimes difficult for them to acknowledge that also costs some money. So I think any ideas around how this is evolving, and also to kind of mitigate it between, on the one hand, being cost efficient, and then on the other hand having that expertise on the ground. I mean, there's this example I've been using quite a bit. For example, if you say there is COVID lockdown in India, India is a big place, right? And only those who have boots on the ground know that in this state is this way, in another state is that way. And if you have a supply chain, and you need to understand where in this big India, let's say, it is happening, how and why. And so if you just have a virtual presence there, you will just not be in the position to really do that. So maybe over to you to kind of tell us a little bit more about this, as you're both very internationally oriented banks. Maybe Cara, if you want to start on this.
Sure. I do think it's ironic that it's, the pandemic has really highlighted this again. I look at cash management in terms of, there's two really main aspects, and one is very high level, right? It's the fully electronic, it's what can be done remotely, it's very centralized, it's the high level treasury piece. And then you have to look at why treasury is there in the first place, right? And that is really to support their business in terms of, you know, how they sell, how they develop, etc. And typically that second piece, you know, happens in, you know, more remote locations than the regional treasury or the global treasury center, right? And I think that's where banks with local presence will really come into their own. And, you know, when you look at the whole supply chain, being close to customers along that is very important. And the pandemic highlighted that, as you said, right? What were particular governments going to do in terms of support for particular companies that may impact your supply chain further down the line, right? What kind of heads up did a particular government or bank give to companies in their areas around how they were going to go into lockdown, come out of lockdown, etc. And also, you know, we haven't talked at all about any of the, you know, the large political issues that have been going on at the same time, right, between different countries and within countries. So I think for the very local piece, you know, there is no substitute for boots on the ground in terms of understanding and being connected to local market regulation, local government agency, and, you know, multinationals and domestic companies all along that supply chain. And there is a portion of cash management that can always be done, you know, centrally, remotely, etc. But when you really get into the weeds of our customers, our clients' business, and how those treasury functions help their underlying business, having that local knowledge and being able to anticipate and solve for, you know, shocks domestically and insight domestically, I think is priceless. You know, in terms of the push-pull between wanting it and, you know, affording it, I think that's really, you know, when I look at a bank like HSBC, I think the fact that we're a deep bank in many of these countries makes that less of an issue, because we're already supporting governments in those countries. We're supporting, you know, retail in many of the countries and business banking in those countries, right? So it's not like just the large corporate has to pay for the presence, because when the presence is, you know, branches and, you know, supporting local businesses, well, that just feeds up and everybody benefits from it.
Right. Thanks for that. Steven, I think also just to expand that question a little bit, I think Cara mentioned a lot, and you as well, kind of more treasury management than cash management. I think we should also acknowledge that sometimes the word cash management is more from a banking perspective rather than a corporate perspective, right? So clients sometimes really don't care whether it's cash management. For them, you need to have a treasury management solution. Cash management is an integral part of that, but if you are solution oriented, it is that treasury management point. And to that extent, I think these international capabilities, if you think of it more broadly, of cash management playing an important role in the supply chain, etc., is quite important. Maybe if you want to comment on that as well, Steven.
But I think corporates will continue to look for efficiencies. So they will look at, can I further rationalize my setup? Can I simplify? Can I further reduce my banking partners? Can I leverage digitalization? And that's all fine. And that's the way we need to take, the road that we need to take. But we should not think that it's a full replacement for boots on the ground. And what's also what the study suggests. Because basically, what's the advantage of boots on the ground? It's access to local knowledge and expertise. It's access to local resources. And in case of the pandemic, access to local contingency options. So it gives comfort. Boots on the ground gives you comfort that you can, in a sustainable way, support the business. So that, I think, that we translate a lot to the importance of boots on the ground. And of course, from a bigger picture, it's not always omnipresent, but I do think that the pandemic indicated again, underlined again the importance. If we look at the trends, it's a little bit what we have been voicing. There's a lot of digital. I read a technology trend report lately, and they use three things: people, location independence, and resilience. And I think those three are very important for cash management as well, because basically the way people are interacting have changed. Obviously, a more prominent place for digital interactions. And beyond the sanitary crisis, we will see that that digital interaction will continue to take part of it. Location independence, and that's obviously underlined in the short-term measurements that had to be taken. Is okay. We're going to, and also to the argument of supply chain that Cara mentioned. Companies will look at making them less location dependent, rebalancing, diversification of sourcing, but also distribution options. I think those things will all come into play. And if we look at resilience, and especially on the number of processes, we know that digital can be a big enabler. So it's a recurring theme. I think corporates and banks have started the journey of their digital transformation. It's only accelerating, but it's not a replacement for, or a full replacement for, boots on the ground. I think that's the key message. And maybe the one thing that I wanted to add is on the ESG part. I think it's becoming increasingly important, or we as BNP Paribas, we think that it's becoming increasingly important, but it's a little bit more difficult to apply on pure cash management. It's not like in the financing part where you can say, well, green bonds or a number of sustainability criteria that I put in the credit confidence. We're not there yet. But going forward, I think corporates will be paying more attention on ESG. In the criteria. So it's maybe on the lower part in the study this year, but over the years, I think we will see it increase.
Thank you. Yes, I agree. I mean, let's maybe, again, I do have to watch the clock a little bit, but by the way, I'm very happy that we have a very lively discussion here. And I can also tell you that people who have logged on kept on, so that's not a bad sign. And so maybe if we just go to the next question. So I think just looking forward, where do you see most opportunities and also kind of risks for businesses in Europe? Obviously, this is a very broad question, but I think, again, Steven, you mentioned it a little bit. Resilience is important. The more you can anticipate, the better you will be ready to be resilient. So maybe some of your thoughts around that. I mean, there are things like, from my perspective, we have a looming non-performing loan crisis around the corner, which I think banks will have to battle with as much as their clients. And so liquidity constraints, although short-term, have been very well mitigated jointly by government initiatives, by the bank initiatives, etc. But this will unfortunately be a long-lasting effect even after the vaccine has saved us from a health point of view. And then also things, I think, again, coming back to ESG opportunities and the role of cash management there. Again, I think ESG and cash management needs to be seen as a more broad, in a broader context, more with treasury management as such, I would say. And I think, there will be FX volatility, not only because of COVID, but we see a lot of. I mean, we shouldn't forget that there are a number of other events going on at the same time. The trade wars, U.S.-China trade wars. We have obviously our own challenges here in Europe that we have to deal with, etc. So maybe if you look at this more broadly, also the opportunities at risk, and I would stress on the opportunities because I think I try to be positive here that although this was a really terrible shock, I think it gave a lot of people some self-confidence that you can deal with even the worst shock you can imagine, and that also people have done that in a collaborative way, and we were getting through this. So opportunities on that side as well, and not being too sarcastic, there have been benefits coming out of COVID. In certain ways, obviously we could do without it, but there are certainly, as you said, accelerations. There are some opportunities that have been clearly taken on board. So maybe, Steven, if you want to comment on that first.
Well, mindful of time, I'll try to single out two items and I let Cara complement afterwards. The first one, although I want to be, we want to do positive banking and we want to be positive, let's face it, going forward, there are credit provisions, there will be credit losses because the financial stimuli, they will wear off, they will decline, and the true health will be seen in a couple of years, not immediately, where a lot of liquidity is pumped into the market. So that's for banks, but if we translate that on corporates, I think you could argue that there should be a renewed focus or a reinforced focus on credit exposure management, because you should look at accounts receivables positions, keeping them as low as, at account receivable positions, keeping them as low as possible. Don't let the collection process slip. And more generally, I think clients need to anticipate liquidity and working capital challenges by keeping their clients and their suppliers very close to them to very thoroughly understand the cash flows and the impact that they will have. So that's, I think, it's a risk view, but I think it's an opportunity. So that's my first part. Second is, again, coming back a little bit to digital. There are a number of innovations, evolutions in the payments landscape, and notably digital payments, where we see further innovations and further opportunities for corporates. We mentioned instant payments, but we're talking request to pay in Europe. We're looking at other acquiring options like EPI. Clearly, these are instruments that can help in further streamlining the cash management operations and thereby obtaining additional visibility on the liquidity positions. And then maybe a final note on API connectivity. I already said that it's interesting, but it's very interesting when it allows integrating bank exchanges into the corporate ecosystem or the corporate processes. One of the, and that's my last remark, one of the things that we see is that the true value lies in there. For example, in 2020, we went live with a health insurer. We implemented a combination of APIs and instant payments. We offer the reimbursement process. But it's not only the reimbursement, which is via API initiating an instant payment. It's about a complete process, a business process, and they've built a brand new online claim handling system where a patient comes in, submits the claim is validated, and upon acceptance, the reimbursement is wired out via API and using an instant payment instrument. At the end of the day, it means an important increase in client satisfaction because I leave the website and the money is in my account. But for the corporate, the health insurer in this case, it's an important gain in efficiency in the claims handling process. And I think use cases like this, where we leverage different evolutions in technology, combining them into true value for the business of corporates is the road that we should take. Yeah.
Thank you. Cara, very briefly, because we do run out of time, but it's a good sign actually that there was a lot to discuss. Very briefly on your view for the opportunities.
I really hope that we don't, as an industry, and as a treasury community, waste this opportunity. And that is that, we don't go back to our old ways of, things having to take a long time, and that we don't embrace all of the technology that's now available and the pace at which we can change, right? So that's my first wish is that we all have the confidence to take advantage of the agility that this crisis has really forced out of us. And I think secondly, on the ESG side, and you hear governments talking about it, it's this ability to build back better. I think as a community now, we have an opportunity to do the right thing as we start from, we start from scratch again. So when I look at that, I think corporate responsibility around how we approach some of these topics, I think that will continue to bubble up to be a big priority, and I really look forward to the industry's response to that.
Great. Appreciate, we are now out of time, but maybe for those who can hang on for one more minute, I just want to ask at least one question. We got a couple of questions here, but I think one was quite interesting around liquidity forecasting, where the question reads, getting these more real time also put higher demands on the banks being able to deliver actual outcome. This is a challenge, especially in a multi-bank environment. Could you please comment on your views? Maybe just one sentence each, but I think it would be, because I think liquidity management, as also Steven, you mentioned a few times, Cara, is one of the big opportunities going forward.
Yeah, I think on the liquidity and the forecasting piece, that real time, using real time transactions and banks and clearing, we have a huge rise in SEPA, instant, etc. in Europe. If banks are offering these solutions and other banks are, in that ecosystem as well, if we're all using standard, standard formats, etc., it shouldn't be hard for us to be able, even in a multi-bank way, to give corporates access to that in as much of a real time, right? Because if our infrastructures are moving to much more real time and we're giving corporates access to that infrastructure, then the information should be there, right? So I think as volume moves from the traditional transaction types that are typically batch processed into more individual real time, then that information will be available on the bank's platforms, and it will get easier for the corporates to avail of that and decision it.
Great. Steven, just 10 seconds.
10 seconds. Well, I think, if we talk about forecasting, it's not only about the actual position or the actual incoming receivable, it's about the order to cash and the visibility that you have on that, and the way that you can use your corporate data to predict when those receivables will come in. On the other hand, of course, real-time visibility will put some stress on the system. We've talked about API. I keep to my remark that API standardization is a key driver in order to allow multi-bank visibility real time for corporates.
Yeah, thank you very much. Great. Well, I think the time is really up. So first of all, Cara, Steven, thank you very much for your very insightful remarks, and really appreciate that you're taking the time. As probably people know, that it's not just this 1 hour, but obviously Cara and Steven have taken some time up front to prepare, to work with us to make this such an insightful event, I hope. And also the attendees, very much, thank you very much. I think 90% even were hanging on to being 5 minutes past the hour, so I think that's a good sign. But we do appreciate also you have other things to do, so we should now probably close, and thank you very much again, and looking forward to a next webinar that we are planning for the first quarter of 2021. So if with that, maybe happy holidays, and probably hopefully an even better, well, much better 21 that we had in 2020. Thank you very much again. Bye-bye.
Thank you.